Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Thursday, May 16th, 2013. Well, a market that continues the trend to the upside today, a candle here that's made a lower high and a higher low and doesn't change the trend to the downside, so no opposite configuration. Therefore, the prior trend that was to the upside remains in force. Having said that, however, we do have some serious doubt about continuation of this trend to the upside. In bar chart terms, this is an inside day, and that's a day where the range, the whole range, that's the distance between the high and the low, is within the range of the previous bar. And that raises some serious doubt about continuation of the trend to the upside, basically because the buyers weren't strong enough to take out the high of the previous candle or bar. It's also a special type of reversal pattern in terms of bar charts, and that's a hook reversal, and that's where we have a prior uptrend, which is a prerequisite, and a first time frame uptrend, and then we have this inside bar where the open is up towards the high and the close is down towards the low, and this bar pretty much fulfills that requirement. So what we have here is basically the buyers not strong enough to take out the high, and we have the market opening up at the high, the sellers coming in and closing the market with control in a trading day where the basically the sellers have shown strong commitment throughout the whole trading day, and the buyers have shown no commitment to taking this trend higher, and that's what raises doubt about potential continuation of the trend to the upside and sets this market up for that potential change of trend. Now, in candlestick terms, this is also a potential reversal pattern. It's a reversal bearish harami pattern, and that's where we have prior uptrend, and that's important. With all reversal patterns, we require an uptrend. Then we have this whitish body and a largish whitish body prior to the current candle, and then we have a small black body or a smaller black body that was within the body of the previous body. So we have the previous body engulfing the body of the current candle, and that means that basically that the upside momentum has been lost to the sellers. And we saw yesterday where we saw a reduction in the size of the white body of the candle, and that raised some doubt about continuation of the trend. But today we now have that black body, and it says something about the lack of strength from the buyers. And the black body for today means that the sellers have made a substantial amount of net bearish progress on the day between the open and the close as compared to the sellers, and that does set the market up for that change of trend. So we will be looking for a potential lower high and lower low. Now, if you recall, for the previous couple of days I was mentioning that this market is looking a little bit overextended in distance from the cloud, and obviously that is having its effect, and the market needs to find equilibrium again, and equilibrium in that long-term time frame is determined by where the cloud is. So there is a good possibility of price action retracing back towards that equilibrium. Now, as we know also, when we have a very strong uptrending market, the first place that the market tends to find support is at the Tenkan Sen. So the Tenkan Sen here at 1637 has potential to hold as very, very strong support, and that basically coincides with the top of this little congestion area that we saw in the recent past. So around that area, around the 1637, 1638 and just below, we could see some very, very strong buying coming into this market. Down below there we have a minor level of support at the 1623 level, then some minor support around 1620, and then nothing until we trade down to around that 1600 round number, and that should offer itself as very, very solid support to this market. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend to the previous time the market's trending up, and here we see a market that technically hasn't changed trend yet. The market tested almost to that 423.6% level, came within 5 points of it. There is a possibility that that level is exerting its effect now. So we have seen a day where the sellers have taken control. We have these potential reversal patterns set up, so there is good potential for a change of trend to the downside. In terms of the Fibonacci retracement, we're in an expansive mode of that. We had traded through the 423.6% level. As I've mentioned previously, a market that's trading through any of these levels, especially the 423.6, is a very, very strong market, and is a market that it has potential to have really done a lot of work and potential to retrace. This bullish activity up above the 423.6% suggested that there was a possibility of market trading up to the 685.4%, and this really has said something about this strength of this upside trend that we've seen over the last couple of weeks. It's little wonder that we are now seeing some negativity in this market, but technically we don't have a change of trend yet. With changes of trend we do need confirmation, so we will be looking for a candle with a lower high and lower low. If we don't see that, if we don't see any follow through from this negative trading day that we've seen today, then we do need to watch the high of the current candle and around the high of the previous candle around 1661, and that would suggest the potential for the market to trade up to around the 685.4% level. But really what we're looking for is how the market reacts to these levels over the next day or so. Now, in terms of Ichimoku, obviously we still have a bullish market in all three timeframes. The market's trading up above the cloud, so a bullish market in the long-term timeframe, bullish in the medium-term timeframe, so we're trading above the Kijun-sen. If you look at that Kijun-sen, that has turned flat, and that could be important for this market. That's another factor telling us that there is a possibility of some sort of a change of trend back to the downside. Very often when the Kijun-sen turns flat, price action is attracted back towards there. So that's the Kijun-sen represents equilibrium in the medium-term timeframe, and we were looking a little bit overextended in that regard as well. In terms of the short-term timeframe, the market is trading above the Tenkan-sen, so bullish, and the Chikou span is above the corresponding price action, so confirming the bullishness that we're seeing in all three timeframes. But honestly, looking at this market, looking a little bit overextended, it has done a lot of work over the last couple of weeks. Some sort of a retracement of this strong uptrend that the market's been in wouldn't surprise. It is due for it. The levels that I've already mentioned, based on the Tenkan-sen trading around here, around these minor resistance and then support levels, will be important. But the ultimate area of support for this market is down around the 1600 level. It certainly doesn't seem as though the market will be testing down to there soon. More likely is that if we do see a change of trend, we'll find support down around this area, around the 1630 down to roughly around the 1623 level, and then there is good potential for the buyers to come back in and test back up to these levels around the 1660 level.